So this is how it goes. I wanted to look for better ways to passively invest here in Canada, and these are the robo options I really found will be helping you guys. I have done enough research, so you don't have to do this. Let's get started. Now, before we go into complete guide to robo investing here in Canada, I would like to separate you into 3 different personality types. You will have to choose which one you belong, and I will help you choose the right robo investing strategy based on that. The first one is active participants. If you follow market at least once in 2 days, then you belong into this category. The second one is passive participants with good knowledge of stock market. So if you are passive, but you still have a good knowledge of stock market, you know which stocks are performing well, then that's one for you. And the third one is for the beginner investors. You are completely passive as well as have less knowledge of the stock market. Now, if you have selected one of the personalities based on what you want to do, then let's get into why you need robo advisors and who probably needs the robo advisors as a part of their investing plan. The first one is if you are new to investing. If you don't know where to start from, where to begin, what kind of ETFs to choose, then probably robo advisor is the best starting point for you. The second point is if you do not like researching. If you are someone who are really not a fond of stock market and like to follow stock market for a very long time and do not like to research what you want, the third types of people who would probably need robo advising are the people who knows that they cannot keep track and want to keep their investing passive. They don't want to actively track the market. The fourth type of people who would need the robo advisor are the people who still want better returns by being passive. And the fifth type of people who probably needs robo advisors are the people who do not want to spend a lot of fees on the mutual funds and other type of smart portfolios out there. Now that we know your personality types when it comes to investment, and you also know if you need the robo advisor or not, let's try to think why would people need these robo advisors at the first place. With traditional financial advisors, you generally have to have a minimum investment of, let's say, $50,000 or $100,000, but when it comes to robo advisors, you technically do not have to pay that much, and you can start as minimum as $500 to $1,000. Sometimes even $100 is sufficient enough for robo advisors. Generally in the market, the financial advisors ask between 1 to 3% as a fees. Sometimes they also have a flat fee depending on how large your portfolio is. But when it comes to the robo advisors, the MER or the fees which they charge for your account is pretty less, somewhere ranging between 0.3% to 0.5% on an average. But probably you are here because you do not even have $100,000 right now to invest and you are looking for something to start as a beginner. So in that case, why are we even talking about the financial advisors? Because I don't think that at this point of time we need any sort of financial advisors, because obviously they work on bigger portfolios like $100,000 plus investments. And if you want to know more about the MER in general, then please leave a comment and I will explain to you in another video how MER works and how it helps. Robo advisors right now works on the modern portfolio theory. Based on the modern portfolio theory, even if you just follow that, you can expect a mediocre and intermediate returns on your investment without looking further down into the tactics on how to increase your profits and your margins over your investments. With robo advisors, because they follow the modern portfolio theory, they have different levels of risk for the diversification of your investments. You can choose between the aggressive or the balanced or basically the conservative side. It depends on your situation. So these sort of different risk levels and the investment really helps you out when making the right decisions. One another interesting thing these robo advisors offer is rebalancing your portfolio. So for example, you decide that you want to go for a balanced portfolio. In that case, you don't have to rebalance your portfolio again and again depending on the market conditions as well as the ETFs you buy as a part of this portfolio. Instead, they do all the buying and selling for you without any additional charges. So these rebalancing is really an important thing when it comes to management of the portfolios, and if you're doing on your own, I think it takes a lot of time. So these robo advisors really helps you save that time when it comes to the passive investments. The another important piece some of the robo advisors cover is called the tax loss harvesting, which is basically trying to understand how you can use your low performing ETFs or assets into making sure that you are not paying higher taxes at the end of the year for your high performing assets. So if you want to know more about the tax loss harvesting as well as rebalancing of your portfolio, I will probably cover that into another video, so please let me know in the comments if you are interested. So today I will help you to pick the best robo advisors for you in Canada by using various different criteria, like how much time it takes to set up your account, how much fees do they charge, how much minimum investments do you need to start your robo investment, if they have any additional features or not, and if it's a beginner friendly platform or not. So let's get started. So our first pick of the day is WealthSimple. WealthSimple has gained a really nice name when it comes to the Canadian economy with their great commercials. Everyone knows about WealthSimple and their simplistic investment approaches. WealthSimple also have a great lucrative referrals, which basically helps people to spread the word for them and makes it really easy for WealthSimple to gain new clients. When it comes to robo advisors, WealthSimple is really changing the game. If some of you already know that how WealthSimple started by allowing free stock trading, that brings a really similar choices when it comes to the robo investments, because it is equally simple and easy to use. You know that they also have a $5 billion of asset management already, so that's a pretty huge amount when it comes to just robo investments. For WealthSimple, the criteria is as follows. The time to set up is really easy for them. Fees ranges somewhere between 0.4 to 0.5% with an additional MER of 0.5 to 0.7%, which brings the total fees to around 1%. The minimum investment required is $0, so technically you can start with as low as possible. Some of the advanced features WealthSimple has is basically access to the human advisor, which is really needed for the initial investors who don't know or don't want to trust the robo advisors. The tax loss harvesting features, which is also a really advanced feature, and WealthSimple does offer that. They also offer social responsible investment. So if you are someone who are interested into social responsible investments, you don't want to basically fund into any companies which are not helping society in general, then you can always choose these kind of portfolios. And yes, it is also beginner friendly. The second one is Quest Wealth by Questrade. Questrade has gained a proper momentum in the market by providing or working on their platform, and they are like really interested into making their platform the best in the market, and a lot of Canadians do believe that. So Questrade is definitely reliable, and of course you can expect Questrade to have their smart folios coming into the picture. Questrade has done great investment into researching for their folios, so that probably has an advantage over the other companies in the market. Questrade comes with various different plans based on the modern portfolio theory. They have anywhere between aggressive, growth, balanced, income, and conservative types of plans. So you can definitely choose from these wide variety of plans depending on your expectations with the market. So let's jump into the criteria. Because Questrade has more plans, it takes moderate time to set them up. The fees ranges between 0.20% to 0.25%, with an average MER of their ETFs ranging between 0.2 to 0.3%, which brings your total fees to around 0.45 to 0.5%, which is obviously better than the WealthSimple. The minimum investment required for the Quest Wealth is $1,000. Anything less than that is considered as a cash. So even if you start with $0, until you reach that $1,000 mark, your investment will not get started. Some of the advanced features they have is the access of human agents to help you set up. Obviously, the social responsible investments they do have as well. And the last and the most important piece probably they have is rebalancing. So you don't have to worry about balancing your portfolio on your own. They do provide it for you depending on the plan you choose. The third robo investing platform we have for you today is the CI Direct Investing. CI Direct Investing was previously known as Wealth Bar, if you have heard about it. It comes from a CI Financial, which is obviously handling one of the largest portfolios in the Canadian economy. So you can definitely trust as a part of this company that they have a great plan when it comes to your robo investments. They do have around $450 million worth of assets managed through their robo investing platforms, which is also a big number if you want to consider how reliable it is. They have a numerous number of portfolios for you to choose, so they are not ranging from few risk levels. They have a very large customization when it comes to choosing the right portfolio for you through robo investments. So even though it's a robo investment, even though it's a passive investment, but it still helps you to choose the right folio you need. Now let's jump into the criteria for CI direct investing. It obviously takes longer time to set up because it has custom portfolios. The fees is 0.6% for the first $150,000, which is what you will probably need for the initial setup. The MER of their average folio reaches between 0.3 to 0.4%, which takes your overall fees to around 1%. The minimum investment required for the CI direct investing is $1,000. You cannot start without that $1,000 mark initially. Some of the advanced features they have are the finance planning tools, which is obviously very catered finance planning. You can do some of the personalization they do provide for your investment portfolios is really great and one off in the market. The diversification which they provide is also very interesting. You can choose between the types of the companies you want, between the range of the companies you want. They do also provide the social responsible investments. And yes, of course, they are not beginner friendly. As I said, that they do have a lot of customization and personalization option, which makes it difficult for a new investor or a new beginner investors in the robo investing platform to choose, because obviously they would not know a lot about it, or probably they do not have an interest to learn about it, and it might not be the right fit for them. I also have two bonus robo advisors for the people who do not trust these trading companies and instead would want to go with traditional banking accounts. The first one is RBC's Investees. Now, of course, RBC is one of the largest banks in Canada. There is no way they're gonna run away with your money. So you can trust them with your money when it comes to investment, especially with the robo investments as well. RBC has gained trust of many families across the time and has been reliable when it comes to banking as well as securing your funds. RBC probably has the lowest cost when it comes to the fees up till the management of $100,000. So technically it's really beginner friendly when it comes to the robo investment. Now let's jump into the criteria for RBC Investees. RBC Investees takes no time to set up because it is very simple folio. The fees ranges between 0.5 to 0.55%, and the MER, traditional MER for their investment folios, are ranging between 0.15 to 0.30%, which takes your overall fees to somewhere between 0.65 to 0.8%. The minimum investment required for RBC's investees is $0, and the investment starts with as low as $100. So once you reach that $100 mark in your investment, they will start investing as a robo advisor. The advanced features RBC Investees supports is their own standard portfolios. So they have dedicated portfolios derived, so they are really best in the market. Sometimes you want to go with them. The other thing is the access to human advisors. Now RBC being the leader in the market, they have a huge range of financial advisors there for you to help you out choosing the best way you can make the most out of your investments. So I would definitely recommend doing that if you are going with RBC Investees. And yes, of course, RBC Investees is a beginner friendly tool. The another better robo advisor in the market when it comes to the traditional banking is the BMO Smart Folio. You might not know about it, but BMO Smart Folios is basically the first or one of the first robo advisors in the industry. BMO also comes with trust of number of years because it is one of the oldest banks as well. Also is considered top 5 banks, so you can definitely trust them when it comes to banking and investments and securing your funds. One another interesting thing about BMO's folios is that they use hybrid approach, so they do not always rely on the technical capabilities of their algorithms, but they also have a human approach. So humans technically monitors your portfolios other than the algorithms as well, and make sure that they make the adjustments according to the market situation. Now let's jump into the criterias for BMO Smart Folios. BMO Smart Folios takes no time to set up, obviously, because it's an easy to use tool. The fees ranges between 0.4 to 0.7%, and the MER for their investments ranges between 0.25 to 0.35%, which technically takes the fees almost near 1%. The minimum investments you need for the BMO Smart Folio account is $1,000. You cannot start with less than $1,000, so you would need to save that money before you can think about this account. The advanced features BMO Smart Folios has is basically their own standard portfolios, which are tried and tested over a number of years. They do have 17 financial advisors available for you to take the help whenever needed. And of course, BMO Smartfolios is beginner friendly as well, so you can trust that when it comes to starting your journey with the robo investment. Now, if you enjoyed my video on the complete guide of robo investing in Canada, you would probably like this video as well. So please check it out, and I will see you in the next one.